May profits be upon you. Welcome back to another episode of the Forex Weekly Forecast with RT Money. Okay, let's take a quick look at the cable pound USD. First, the first thing we want to do is establish our bias. What is the bias here? The bias is from this high point, lower low, lower high, lower low, lower high, did not break that high, lower low, lower high. Didn't you saw I skipped over this because this isn't major structure. This is major structure, the swing points, right? This establishes your trading range from the lower low to the lower high, and from the higher low to the higher high. You understand? That's until you break the trading range, then you make a new higher high or a new lower low. This is what do we call substructure? All right, minutia, if you will. All right, so we break that low, lower high. Now, this is an important point. We're making lower lows and lower highs. We have a trend to the downside, right? What is our next structural expectation? What is our next structural expectation? A lower low or higher low or higher high? What is it? Lower low, lower high, lower low. We did not break that high, so this is a lower high, but it's not established as a lower high yet. This is about as important as this because we are within the trading range. Keep that in mind, folks. You have to break that trading range high in order to make a higher high. And when you make a higher high, then we're talking about a market shift, a shift in the market from bearish momentum to bullish momentum. Very important. Okay. So right now we're still bearish because we didn't break that trading point, that trading range high, and we're heading towards this trading range low. I hope everybody can follow me. That's the quick lesson. Okay, so let's get back to the forecast. Well, if this is potentially a lower high, it doesn't become a lower high until it breaks the low of the trading range, making a lower low. As soon as it breaks here, this becomes a lower high, and we're establishing a lower low. Got it? Good. So the next structural expectation is a lower low. And why is that important? For this other reason. The higher time frame structure establishes the targets for the lower time frame structures. All right. So we know what the intent of price is to make a lower low, which means we have directional bias. We're heading down. All right. So when we go down to the lower time frames, we're not getting caught up in this mess. You know, we know that the higher time frame bias is bearish, but we don't want to get caught up in this. We know that if we take a long here, as this is on a lower time frame, an uptrend, if we know that we take a long here, we know that that long is counter trend to the bigger higher time frame trend, which is bearish. So we have to keep those things in mind. We can't expect price to just keep going up. You can't swing it out. These are short-term goals if you're going counter trend. Got it? All right. So you have to allow me to digress there. So, all right. So the next, we're bearish on the daily, and we know that this, we already have a potential lower high already formed. We're waiting on the establishment of the lower low, which would be established once we break that low here. Got it? Okay, I hope that wrapped that up real nice for you. Now, let's go to the 4-hour. And what do we have on the 4-hour? This is where we get things get really interesting, because we are heading towards this POI here. All right. This is the swing point. All right, this is the established swing low. All right, of major structure. This is it. Once we break this, hey man, we're just continuing in the bearish trend. Got it? Okay, so what is our lowest point here? Here. So I'm looking here. All right, you can see that we have relative equal lows here, right? So this becomes our big, actually, this is a bigger one. This becomes our magnet for price. Liquidity. Lots of people took longs here and left stop losses here. All right, and price is going to come back and get those stop losses. That's the way market makers work. That's what keeps them going. All right, this is our opponent in trading, the composite man. You know, where you think you're good and safe, he's coming back to get you. All right, but anyway, that's beside the point. So I'm looking for price to come and take out these relative equal lows, and there's a lot of pips to get between there and here. We're talking about 68 pips to take out these lows and establish the lower low, which would make this the lower high, right? All right. So we have to look in this area. We have to look in this area to see what would be a good area to keep an eye on. What I have here is price coming down here, making this low. All right, establishing these relative equal lows, which I think is going to be taken out. And then you see how price lifted up here, right? So I'm looking at this area, and I'm wondering, is there an area here where price could turn around or give a reaction to? So that's what is driving me right now. I'm looking at this area here, all right, because I believe once it breaks this area, if it breaks the low of this area here, this all becomes very vulnerable. I forgot to mention something too. One of the things that you have to keep in mind is strong highs and strong lows. The point of a low or the point of a high is to break and make a new high or a new low. All right. In this instance, this low is weak. Why? Because it didn't make a new high. It didn't break that high. All right. And when it doesn't break, doesn't break higher, that means it becomes a target for liquidity. And you see it was taken out here. Okay. What is wrong with this one? Aha, another one. It's weak. This is a weak low. Why? Because it didn't make a new high. Kept that one intact. So price is coming back to take it out. Got it? Now, let's get back to the 4-hour. What we want to do is find a way to get into this price. All right. So I'm looking here. Here we are. All right. This is an area where price may pull back, and then we'll see the last charge through. All right. You see that it's you guys, we're just trying to find where price may turn around. All right. Now I got that as a refined area but we could use this whole area. We could use this whole area, but I have it refined here because I believe that once we take out this low, once we take out the low of this, the order block I have highlighted here, because of the way price aggressively moved from this level, you know, I'm thinking that we might get a reaction here, and this will give us our area to get in. All right, you see between this, the high of this doji here and the low of the candle here, this candle, the low of that wick, that in between is inefficiency. This is an imbalance, and price will not leave an imbalance like here. It'll come back and rebalance it. That's the way price works. Okay. And I believe, I'm hoping that it doesn't mean it doesn't immediately. As you can see, we have this price, we have inefficiencies here, this inefficient price movement. All right. And price will come back and clean that up at some point. They come back sooner than later, sometimes later than sooner. All right. But I would like to be able to get into this this trade as it breaks this low. So I'll be looking for a price to quite possibly come and take this fair value gap. This is what this is called. Some people call it an imbalance or an inefficiency. It's all the same. All right. Let's see. What do I have here? All right. And I believe that price will come back into this fair value gap, I'm hoping, and give us an opportunity to take this down. Okay. What you want to notice is along the way is that price is breaking through supply and breaking through demand, excuse me. You see how this was a demand zone here, and price broke through it, came down, reacted. This is the extreme of that reaction. Very important. This is a little lesson. All right. Gave the extreme of that reaction and turned this into a supply to demand or demand to supply flip zone. This is a flip zone. All right. It turns from demand to supply. All right. We broke through it, snapped through it. All right. But the point of this is the extreme of this reaction. The reaction was here. We come up, we come down further, taking out that low, right? Price comes back up to the extreme of the reaction. This is where you take high probability trades, folks. This is a high probability trade every time. Okay. Left the relative equal highs up here, left that fair value gap, came back to the reaction from here. All right. And you could have shorted that all the way down. All right. Now, those are the things you want to notice. That lets you know when you're talking about expectational order flow, it's bearish, especially when you see that it's breaking through demand zones. I hope you understand that. All right. If you have any questions, leave a comment in the comment section about it. All right. So this is where I'm looking. I'm hoping that we get to see something like this. Boom. It's that simple. All right. POIs. You see how price gave us this this doji here, inside candle. I'm looking at this area as a possible POI. All right. I like the fact that this area is covered here, and then you have a test of this area here. So the entry might be on a lower time frame. Of course, I like to look at the 4 hour, the 15-minute, and then enter on the 1. All right. But what the point of this is that we're looking for some kind of pullback into the fair value gap, and around this area, we're going to be looking for an entry short so we can take out these relative equal lows. That's it. I hope that we get this set up, and hope we can take it together. I'm going to give some updates on this one, I promise you. And I will see you in the next video. I'm going to give you a link to it at the end of this video. You'll see it up on your screen now. Guys, be careful. I will see you in the next one.